They told you solar panels would save the planet. They told you electric vehicles would end emissions. They told you the green energy revolution was coming and nothing could stop it. They lied. Not about the goals, about the physics. Every solar panel requires silver. Every electric vehicle requires 3 times more silver than a gasoline car. Every wind turbine, every battery system, every component of the green energy infrastructure depends on a metal that's rapidly disappearing. And here's the problem nobody wants to discuss. There isn't enough silver on Earth to build what they're promising. Not even close. The solar panel industry alone will consume 98% of all known silver reserves by 2050 if current plans proceed. That's not accounting for electric vehicles, not accounting for 5G networks, not accounting for medical devices or industrial applications. Just solar panels, one industry, 98% of all silver. You can't print silver. You can't legislate it into existence. You can't vote for more of it. Physics doesn't care about your climate goals or political commitments. Either the metal exists or it doesn't, and it doesn't. But that's not the crisis. The crisis is that while governments promise green futures, the physical metal is vanishing from vaults at unprecedented rates. Between October 1st and November 15th, 2024, 37.6 million ounces of silver disappeared from COMEX warehouses. That's 47% of total registered stocks, gone in 47 days. This is the largest vault drain since 1980. Industrial buyers are panicking. Samsung, Tesla, Apple, every manufacturer that needs silver for production is scrambling to secure physical supply. And they're discovering something terrifying. There isn't any. The vaults are empty. The refineries can't keep up. The mining production is declining, and China just cut off the West's supply. This is the story of how green energy died before it began, because nobody checked if the ingredients actually existed. Let's start with what silver actually does. Why it's irreplaceable. Why no amount of political will or technological innovation can substitute for it. Silver is the most conductive element on the periodic table for both electricity and heat. Nothing else comes close. Copper is cheaper but less efficient. Gold is more expensive and scarcer. Silver is the perfect industrial metal. And modern technology cannot function without it. Every solar panel contains approximately 20 grams of silver. Doesn't sound like much until you calculate what net zero targets actually require. To meet 2050 climate goals, the world needs to install enough solar capacity to generate multiple terawatts of power. That translates to billions of panels, each containing 20 grams of silver. Do the math. Billions of panels times 20 grams equals millions of tons of silver demand. Current annual mining production? Approximately 25,000 tons. Total above-ground silver stocks available for industry? Estimated at 2 billion ounces, roughly 60,000 tons. The solar industry alone will exhaust nearly all of it by 2050, before accounting for any other use, before electric vehicles triple their silver consumption per unit, before 5G infrastructure demands more, before medical technology expands, before electronics proliferation continues. The numbers don't work. They never worked. But nobody in government bothered to check, because checking would mean admitting the green energy revolution is physically impossible at promised scale. Electric vehicles make it worse. A traditional combustion engine car uses minimal silver, mostly in electrical contacts and minor components. An electric vehicle uses 3 times more. Battery management systems, power electronics, charging infrastructure. Every component demands silver. Global automotive production is approximately 90 million vehicles annually. If even half transition to electric, that's 45 million EVs requiring triple the silver per unit. Another massive demand increase hitting a market already in deficit. And the deficit is accelerating. Not because demand is rising, though it is, because supply is vanishing. COMEX, the primary commodities exchange where silver futures trade and physical delivery occurs, maintains warehouses where metal is stored. These vaults show 2 categories: registered, which is available for delivery against futures contracts, and eligible, which is stored but not committed to delivery. The registered category is what matters. It's the physical metal backing the paper contracts, and it's disappearing. October 1st, 2024, COMEX registered silver stocks stood at approximately 80 million ounces. November 15th, 2024, 42 million ounces. 38 million ounces vanished in 47 days, nearly half the available supply. This isn't normal market activity. This is panic buying by industrial consumers who realized physical metal is becoming unavailable. They're taking delivery, removing silver from the exchange system, and holding it because they can't afford production shutdowns when suppliers can't deliver. Samsung can't make phones without silver. Tesla can't make vehicles without silver. Apple can't make devices without silver. These companies are securing supply now because they see what's coming. A market where money can't buy metal because metal doesn't exist at any price. And while this physical drain accelerates, the paper price barely moves. Why? Because the market isn't real. Here's how the scam works. Silver trades on exchanges like COMEX as futures contracts. These are paper agreements to deliver silver at future dates. Speculators and investors trade these contracts constantly, creating price discovery and liquidity. Except the vast majority of contracts never result in physical delivery. They're cash settled. The buyer pays or receives the difference between the contract price and the settlement price. No metal changes hands. It's purely financial. This creates an opportunity for manipulation. If you can flood the market with enough paper contracts, you can suppress the price regardless of physical fundamentals. Sell massive quantities of silver you don't have, drive the price down, close the position for profit or roll it forward, repeat forever. And that's exactly what major banks have been doing for decades. JP Morgan famously paid nearly $1 billion in fines for manipulating precious metals markets, including silver. Not for attempting manipulation, for successfully doing it for years. The mechanism is simple. When silver prices start rising, threatening to signal inflation or dollar weakness, banks dump enormous quantities of futures contracts onto the market. Prices crash. Physical buyers get cheaper silver temporarily. Paper traders lose money. Banks either profit from the short or accomplish their goal of price suppression. Why suppress silver prices? Because silver is a monetary metal and inflation hedge. If silver prices soar, it signals that fiat currency is losing value, that the dollar is weakening, that inflation is real. Central banks and commercial banks have every incentive to keep precious metals prices subdued to maintain confidence in paper currencies. The ratio is staggering. For every 1 physical ounce of silver in vaults, there are approximately 100 paper claims, 100 contracts promising delivery of 1 ounce of metal. If even a small percentage of contract holders demand physical delivery, the system collapses because the metal doesn't exist. The Hunt brothers discovered this in 1980. They tried to corner the silver market by taking massive physical delivery. The exchanges changed the rules mid-game, restricted their trading, forced liquidation, and bankrupted them. The lesson was clear. You can manipulate paper all you want, but try to expose the scam by demanding physical and the system will destroy you. So the game continued. Banks sell paper silver that doesn't exist. Prices stay artificially low. Physical buyers get cheaper metal while it lasts. And the gap between paper promises and physical reality grows wider every year, until now. Because something changed. The physical shortage became impossible to hide, and the biggest player in the game just flipped the board. January 1st, 2026. China implements a licensing system for silver exports. Officially, it's about controlling strategic resources. Practically, it's an export ban. China controls 60 to 70% of global silver refining capacity. Not mining, refining. Taking raw ore and concentrates and turning them into usable industrial-grade silver. The West mines silver, but sends much of it to China for processing, because that's where the capacity exists. Now China is keeping it, or more precisely, they're allowing exports only under license, which they can grant or deny at their discretion based on domestic priorities. And their priority is securing silver for their own industries. This is economic warfare, not bombs, not tariffs, resource strangulation. China recognized that the West's green energy transition and technological supremacy depends on silver they don't have. So China cut off the supply. Western companies are panicking. Apple needs silver for iPhones. Tesla needs silver for vehicles. Samsung needs silver for electronics. Every major manufacturer depends on Chinese refining capacity. And now they can't access it without Chinese government approval. Some are trying to build domestic refining capacity. Too late. Refineries take years to construct and commission. Skilled workers need training. Supply chains need establishing. By the time Western refining comes online, if it ever does at scale, the shortage will be critical. Meanwhile, China continues accumulating physical silver. Their industrial demand is massive. Their strategic reserves are opaque, and their export restrictions ensure that whatever silver they produce or refine stays domestic. The West printed money and traded paper. China accumulated metal. Now the paper is worthless and the metal is gone. The East played a longer game and won. This isn't just about silver. It's about understanding that real resources matter more than financial instruments. You can create infinite paper claims. You can't create resources that don't exist. And the mathematics are brutal. Let's look at 2026 projections. Current annual silver mining production, approximately 800 million ounces. Industrial demand, 1.2 billion ounces. That's a 400 million ounce deficit before accounting for investment demand or monetary demand. Where does the shortage get filled? Above ground stocks, recycling, reduced consumption. Except above ground stocks are being depleted by industrial offtake. Recycling can't scale fast enough, and consumption can't be reduced without shutting down production lines. Some estimates suggest demand will exceed supply by 20-fold if green energy mandates proceed as planned. 20 times more silver needed than exists. This isn't a tight market. This is mathematical impossibility. You cannot print silver, you cannot legislate it into existence, you cannot vote for more deposits. Either it's in the ground or it isn't. And even if it is, extraction takes time. Developing new mines takes a decade minimum from discovery to production. Ramping up existing mines has limits. The green energy revolution requires a metal that doesn't exist in sufficient quantities to build what's being promised. Every government target, every corporate commitment, every climate goal that depends on solar panels and electric vehicles is based on fantasy mathematics. And the divergence between paper price and physical reality is becoming undeniable. Paper silver trades around $29 per ounce as of recent pricing. But try to buy significant quantities of physical silver. You'll pay premiums of 30 to 50% over spot, sometimes higher. Dealers are quoting delivery times of weeks or months. Minimums are increasing, premiums are rising. This is what happens when paper promises meet physical reality. The paper says silver is cheap and available. The market says it's scarce and getting scarcer. Soon we enter what's being called the unobtainium phase, the point where paper price becomes irrelevant because physical metal cannot be obtained at any price. Your money is worthless if sellers have no product. This has happened before with other commodities during shortages. Suddenly, price stops mattering. Availability matters. If you can't buy the thing you need, it doesn't matter how much money you have. Industrial buyers understand this. That's why they're draining COMEX. That's why they're taking delivery now, because they know what's coming. A market where silver is theoretically available at paper prices, but actually unavailable at any price. So what do? How do you prepare for a market that's breaking in real time? First, understand the difference between paper and physical. Paper assets, stocks, bonds, ETFs, futures contracts. These are claims on value. They're promises. They exist in ledgers and databases. When systems work, they function fine. When systems break, they're worth whatever the counterparty can deliver. Physical assets exist regardless of systemic function. Silver doesn't care if banks fail. Gold doesn't care if currencies collapse. Land doesn't care if stock markets crash. Real things have value because they're real, not because someone promises they do. Second, recognize that we're in the late stages of a monetary experiment. Fiat currencies backed by nothing but government promises have existed for 50 years, since Nixon closed the gold window. This is an anomaly in history. For thousands of years, money was metal or backed by metal. We've had half a century of pure paper, and it's ending. When paper claims exceed physical reality by 100 to 1, the system resolves violently. Either paper prices soar to reflect scarcity, or physical becomes unavailable, or both. Either way, the gap closes. And people holding paper when it closes lose everything. Third, understand that governments and institutions are aware of this. That's why central banks are buying gold at record rates. That's why China is hoarding silver. That's why the wealthy are accumulating land, commodities, real assets. The people who control the system know it's breaking. They're positioning accordingly. You're being told to stay in stocks, to trust the dollar, to believe inflation is transitory. Meanwhile, the insiders are buying metal and land as fast as possible. Watch what they do, not what they say. Fourth, recognize the timeline is compressing. COMEX vaults drained in 47 days. China's export restrictions start in weeks. Industrial shortages are happening now, not in some distant future. The window to act is closing rapidly. This isn't about getting rich quick. This is about preserving purchasing power through a systemic transition. When fiat fails, metal survives. When supply chains break, physical goods matter. When promises fail, real assets remain. The green energy revolution will fail or be drastically scaled back because the physical resources don't exist to build it. Governments will either admit this or continue lying until reality forces the issue. Either way, silver becomes more critical and scarcer. Your choice isn't whether to participate in markets. It's whether to hold paper claims or physical reality when the divergence becomes unsustainable. The music is still playing. But there aren't enough chairs, and everyone's starting to notice. We follow the money and the metal to show you what's real. Now I want to hear from you. When paper prices say one thing and physical availability says another, which do you trust? When governments promise green futures that physics says are impossible, do you believe the policy or the mathematics? When the system built on paper meets the limits of physical reality, what do you hold? Drop your answer in the comments. Trust the system or trust the metal.